That's some of our reporting from TikTok, streaming live on Twitter and live from New York. This is Bloomberg Markets. I'm Abigail Doolittle. It's time for Charting Futures, where we dive into the futures markets through the charts. And today, it's all about gold. Now, gold is up 2 days in a row, but it's been a pretty rough road for the yellow metal. Take a look at that year-to-date chart, officially in correction territory, down more than 10%. Really a bumpy ride, especially out of May. And some of this could have to do with investors assessing its haven status. Plus, the dollar's been very strong on the year, up more than 4%. Of course, gold being denominated in dollar strength takes gold down. So let's examine our gold trade first by looking at the dollar, hopping into the Bloomberg, and you can view this chart of the dollar index using the GTV function. And we see here, starting from 2015, the dollar index in relation to its 50-day moving average in blue. And when it tends to get well extended above that 50-day moving average, telling us that the momentum is very strong, it then snaps back, a little bit of consolidation back down toward the 50-day moving average. Well, right now, we're pretty well above that 50-day moving average, heading back down, suggesting that perhaps we do hit that 50-day moving average, perhaps even below, as has happened before. If that happens, it could just suggest that the weakness that we've had for gold this year, maybe it's going to reverse, at least for a near-term bounce. So to talk more about this, I'd like to bring in Joe Perry of Forex Analytix. And Joe, what do you think about this? Do you think that we could see a bounce in gold on the possibility of dollar weakness?
I do. Well, if you're looking at the dollar and you think that the dollar could pull back a little bit, that's going to cause gold to go bad because they are inversely correlated to each other.
Okay, so let's take a look now at the front page, the front contract for the gold futures here.
So if you look here, you can see the tick value is worth $10. Each tick is worth 10 cents, and the value of a whole point is $100, and a contract size is 100 troy ounces.
And one obvious benefit of using the futures markets, of course, the leverage. But let's take a look at your chart now and your trading ideas, because you have two different targets here, the first green bar and then the second. So talk to us about your trade.
So if you can see here, from the end of 2017, we started to bid up, we traded sideways, and then at the end of April, we started to move down, and the dollar started moving up at this point. And as we continued down in this channel, you can see that the RSI became oversold, and then it jumped a little higher, and now it's oversold again, right down as at the low there is 1169.
So your stop is that yellow line, 1167, and then your first target, 1210, which we're pretty close to right now.
Yes, so the trade would be that's a morning star formation, these three candles right here, that's what it's called. And if you were looking for a short-term trade, you would look up and you could trade it to 1210. I would have the stop actually probably around 1180, a little bit higher. But if you were looking for a longer-term trade, then you could put your target up at 1260 and the stop down at 1169, which would be below that candle. And you can see that comes in right here at this prior resistance level, or prior support level right here.
So a near-term trade and a medium-term trade on gold and gold futures. Joe Perry, Forex Analytix, thank you so much for joining Charting Futures. Lisa, Scarlett, back to you.